Welcome to Trading Lounge and the US Indices, and it's the 1st of March, and looking at the SP 500 here, we're looking for a top here at the 2800 area here. So in terms of the trading levels, we have a medium level here, we have a major level here, and we have a minor level here. So the 2800 is a minor level, and we call it's 2800, so I always call number 8 a profit taking number. So we're starting to see that profit taking occurring here. I'm just not seeing a nice impulse wave to the downside coming into this space here. So anyway, let's go in and have a look and shoot the breeze on this one here. So yeah, let's clean this up a little bit here. This is just the 4-hour chart here, and I want to talk over some of the issues that we've got here. So it's, yeah, I mean, the main issue for me is that I'm not seeing a nice clear impulse wave down from the top here. It's currently more like an A wave, a B wave, and a C wave here for a corrective move. Only when it takes this low out here that it would confirm that we're going to be heading down at that point. So when we look at this on the hourly chart here, it's a little bit messy, but so what I was originally looking at is wave 1 here, wave 2 here, coming down for wave 3, 4, and 5 here, but we're just not getting that. We're getting a situation where, yes, we had 5 waves here, so after a correction I know that we'd get another 5 here, but now it's got support here. So yeah, I mean, it could certainly move up from here. That's the point, because we could look at this as an A wave, a B wave, and a C wave to this point here, and it can move up from here as long as that low stays in place. So really, if you're not short at the moment, then that would be the trigger under here, or even the 2780 as a retested resistance would be fine. If you're short here at the moment, we're still leaving the stop up here. We want to leave it above the 28 here. If you're concerned about it, then reduce your position size at this stage and try and get it a little bit closer to something that's more moderate for you to handle. I mean, technically you could also put the stop down to this point here as well here, because this move up through here appears to be corrective in 3 waves here, so that would be okay at that point there as well. But look, let's just say that for whatever reasons that it does break lower here, then I want to talk about where to add positions, which we have already. So let's clean this up here. So I'll just go back over this. So this is the minor level here, the 800 here. So the next degree smaller are the sub-levels. So 1, 2, and 3 here are sub-levels, and 80, 72, and 65 are sub-levels. So when a market is vibrating at or correcting at a minor level, we drop down to the next degrees. We could do the same thing at number 8 here as well. At 10 here, we could go down into micro levels on this side, and micro levels above it to be long or to be short. So this is just this space here, group 1 and group 2 as I call it, is the natural sort of resistance and support for the market to have its correction at this level here. Until it drops out of that, so until this group 2 here becomes the retested resistance, I can't say for sure that it's going to move down from here. And if it was going to move up, I mean, it could move up into this space and then roll over. It's only when it finds support on number 3 here, nice tested support, it can trade above it, but it's only when it finds support here that it would have its normal arrival to this point, reaction, first high above the level, a corrective move here, and then if it moved up from that point, then we'd look to go long at this point, and that would be, I know that it's been retested at that point and it's leaving this number here at that point. If it's leaving this number, then in essence it's leaving this number here, but while this market stays within this space, it's corrective within this space here. And all in all, this is looking pretty sort of not bearish and not bullish at this stage either. So I'm wondering if it's just another wave 4 correction here. We do have a problem with this little trend up here, which I want to explain, and we've talked about it before. In that, yes, it looks like a nice trend here, looks like sort of 5 waves here, but when we have a look at it on the cash market here, this is the 15-minute S&P 500 here for 15 minutes SPX. We can see from this we've got a nice little correction. Here's an ABC, but we can see here that we've only got 3 waves to the upside here. So it's a little bit of a concern. Yes, we could sort of readjust everything like we have done on our website. We've got an ending triangle pattern here ending in 3 waves, and this is much the same for this is the IWM here. So this is a EFT on the Russell, so it's also ending in 3 waves here as well. And in this case here we have a nice 5 waves down. So really we could call this an A wave here, a B wave up here, and a C wave here. It's only if this low here gets taken out here that we would be in a bearish mode at that point for this market. And when we look at another EFT, this is VOO here. This is Vanguard's S&P EFT as well. So it's also got 3 waves up here, but like the S&P 500 here, it's duplicating that. It's quite clear that we've got 5 waves here, a correct move here. That's why we went short here, and we're into this point here. But if this was going to be a 3rd wave down, we'd still be looking for a 4th and a 5th, unless it's down for 1, back for 2, down for 1 and back for 2, then that works. But we do need to see this breached here, and yeah, otherwise if it doesn't breach this and moves up, well then we have to treat this as an A and a B and a C correction here. So yeah, it's only when we come to the Nasdaq here, if we can just look at that for a moment in the same vein here. With the Nasdaq, we can also see from Nasdaq that we've actually got 1 and 2 and 3 and 4 and 5 waves to the upside, but we're still left with this problem over here where we have 5 waves to this point, a correction, and then a move down here as well. So yeah, we need this to break lower here. Any break above this top here, and this market is bullish. That a break above this high here would confirm that this is an A and a B and a C, and then we'll take out this top here on the Nasdaq, and this is the same for the triple Q as well here. So we've got 1 and 2 and 3 and 4 and 5 here, but we've got the same scenario over here as well. So we're not really, it's not really helping us that much. There's nothing here that's nothing here that's clear for me at the moment. So it's just a really matter of a bit of a guessing game in a way. We know that we've got resistance at this level here, so that puts us on the short side. If we had support here, would be on the long side. So we're on the right side, but the problem with being on the right side as well is that we're also, fighting this trend that's coming to the upside here, and we don't really want to fight the trend at all. So yeah, it's still sort of early days. We don't have that confirmation that we're moving in a particular direction at this stage. And I'm just looking at the this is the S&P, this is the tick chart here. This is 100 ticks, not the 20 tick one, and this is what we're looking for. We have the top in play here. This was the other count with this as well, as I mentioned last time we spoke, as an A wave here, a B wave here, and a C wave coming down to here. So that's just the same length as this here. So that's played out quite nicely here. So if I move that here and that here, we're in the same situation here again as well here. So we could look at this as being wave 1 to the upside and wave 2 here, or up for 1 and A and a B and a C wave here. So I guess we could also go long here as well. If I can just bring in some more data here, I'll just copy that. So this is kind of where we are here. So if this is correct, then we can get a long trade in a little bit earlier. I just got to check on that here. There can be one more low coming into this space here. So that means that we can go long above this one here. Okay, so that brings us into 90 here. So another way to view this is that if we take 90 here, and then we go down into the next degree smaller from 90, because it's a nice whole number, then we would look at 91, 92, and 93. So 93 is up here a little bit higher. So if you get a test of support on 93, that will help confirm that we're going higher at that point there. But 90 would be fine, yeah. So we could go long at 90 in this instance here. So there. So this is a big correction for wave 2 here, I have to say. So the other problem with this is that this wave 4 here may get more complicated across here as such as well. But if it does get more complicated sideways here, then we know that it's corrective as well here. So then we'd be looking to go up here. So if we go back to the hourly chart here for a moment, and we can look at just going long at 90. So that just sort of helps shape things up a little bit. So what we could also do here is we can bring this stop down to here. So that brings us into break even for this a little bit. And then we can also look to, if I can just copy this here, and that's 90 here. So obviously it won't be at 90. So it'll be, the time it becomes tested support will be sort of 91 or something like that. So yeah, this is a good point to flip from going short here to going long here, finding some sort of support at 27.90. That's about the best I can do with all of this, guys. And the Nasdaq, we'll have a quick look at that, is basically the same as well here. So we don't want that moving. We've done all the right things in terms of following the Elliott wave structure. We had 5 waves up here for this. The move down as wave 1 and wave 2 here, then down for wave 1, and this may be an A and a B and a C for wave 2 here again. So we've done the right things in being short here, except we're fighting the trend, which is you know, with the higher risk. And also too here is that really we'd want the 7,000, the closest largest number as support or resistance, as resistance here. So we're really on the wrong side of the market here for this. Yeah, we're just looking to get in a little bit earlier. So we can move this stop down here a little bit further. Let me just have a look at this here. Yep. Let's just bring this down to this point here, and we could also bring that lower as well here. So bring it down to that point. That brings us a little bit closer there, and that would have been the retest there, so that should have gone there. We can move that back into this space here. So we've done all the right things. That market moved through here, come back, retest, and then failed and dropped lower from that point. You may be out already, but if you're not, then that's where we should be with this. And also too, if I can just copy that there, if we do get a break lower, then we'll go low again, we'll go short again below this low here, because that would put that all in corrective mode at that stage. So let's just see what comes out of the gates. And you could probably also look towards the banks as well, because when we looked at the banks before, the Citi and Morgans and whatnot, we were looking for another little move to the upside for those guys. And if you are trading long here and it does trigger, then 72 would be the target for that area there. But yeah, so We need to bring that down, put that down there. You can also add on 50 here as well if you're going to the upside here. So 49.50. So that's the midpoint. Well, it's halfway between 100 and 200, of course, but we'd look here as 1, 2, and 3 here. So not the normal thing here. If we get a tested support on 30, then we know that we're leaving the 100 here. The 30 is the top of group 1, so 1, 2, and 3, 10, 20, and 30. It tried to find support here, but just shooting above and is not support. So it needs to come back and test it and then find support and so on. So and this is what it's doing here really in a way. So where this has come back and tested on 7,000 here, and then it's moved up and it's gone into 100 here, so I can put that there. It's a minor level, so we can just darken that a little bit. So the market's moved up here, and it's had an A and a B and a C correction here. So that means that we would first of all have the long trade up here, then we'll bring it down to here, and then we can bring it down to these highs that hasn't been triggered, so we can go to this one. So we're doing all the right things here and going for a long trade if this is breached here, and the target would be 200. So I'll just leave it at that for today. Yeah, so really a game of tactics at this particular stage. Cheers.